Hello, my name is Doug Lennick. I am the Chief of Staff here at the Mather Group. I am a CFP, a BFA, and with me is Adam Recker. He is a CFA and a CFP, so we share a designation and then we have something that's a little unique. He's our Senior Managing Director. Today, markets move, so do emotions. Today, we're actually going to spend our time on Smart Money Moves. We're going to talk about AI, artificial intelligence, and its role in all of this that's going on. So let's just start there, Adam. I'm going to throw the big question to you. What's the big deal with AI? What role is it playing?
Yeah, no, it is a current topic that many are wondering about, and so I think for one, clearly many notice it because of the role it's played in the markets today from a performance standpoint. It's been one of the main drivers of performance in the U.S. this year and in past years. There's a lot of news around the transformative potential of AI. Does that lead to breakthroughs, job losses, a lot of things that are on top of everybody's minds. And I think the role it's playing today is, likely a smaller role than what it's going to play in the future, even with all the headlines it's given. But really the bigger concern that many clients have been reaching out about, at least in mine and other members of our team experiences, is it ultimately, is it a bubble? What do we do about it? Should we be concerned or not? And so by providing a bit of context around, current developments we see, historical developments, both the pros, the cons, positive, negatives of the debate. Hopefully, we can bring a little bit more sense and maybe more of a measured view to the overall debate.
Well, and even the whole concept of bubbles is interesting to me because obviously we've had bubbles over the decades of my career. I've been involved in this for sadly a long time, 5 decades. I'm 50 years plus in the business, and there's always been bubbles. Not that long ago, and quite a while ago, but not terribly long. We had the internet bubble. Isn't this similar to that?
There are similarities, but I think it is a different scenario we're into. And so, a bubble could be brewing, just like others have been created. Going further back and maybe working up to the present to address the current question. I mean, we saw bubbles in railroads many years ago that I think predate both of us here.
Yeah, right.
But they happened, and it was a breakthrough, transformative technology that helped the economy and ultimately delivered value despite going through a period of excess. The internet was something that we all lived through as well. Clearly, there was ended up being a bubble there. Now, a key difference, maybe compared to this current environment, is that there were many companies that were not profitable, didn't have the same earnings power or anything even close to it that many of the hyperscalers, as we call them, have today, namely those Mag 7 stocks, the stocks that have been driving the U.S. market in particular. And so there are differences that while there's been major investment, at least in this environment, these are profitable companies, which mitigates the fear somewhat. And
Well,
somewhat,
yeah. Well, and that's interesting too. And as you mentioned, bubbles. One of the things I think is important for everybody to realize is when the bubble burst, that didn't mean railroads went away. And when the bubble burst, that didn't mean the internet went away. In fact, these things continued on and the survivors thrived.
Yep.
And all of us in the consuming public benefited from the railroads moving on and from the internet moving on. Similar things will happen here with artificial intelligence. Lately, I've been spending time with some of the fintech guys, because I'm wondering what they're thinking. Are they thinking artificial intelligence is going to replace advisors, humans, and will everybody be doing business with an AI person? And that's really not happening. And I'm wondering what you're thinking about that because I'm going to cycle back and talk about it. This maybe says some stuff on it. Tell everybody what does this show?
Yeah, yeah. So a couple things. Just again, since you mentioned talking to other people in the tech industry, which is I would say adjacent to what we have here, really looking at the AI hyperscalers, the largest companies in the US that have been investing massive amounts of money into these technologies. You can see it. This
Now, are
hasn't
these
been.
the Magnificent Seven you're talking about? The hypers?
Yes. So yeah,
Yes.
yep, the
Okay.
left side. So the key culprits, Alphabet, Amazon, Meta, Microsoft, Oracle in particular have been the ones that have really grabbed headlines. And what this is saying is that on the really left-hand side, the amount in billions that are being deployed into these technologies per year, you can see is climbing incredibly, basically
Wow.
going exponential, right? At the same time, one of the concerns, though, is more and more of operating cash flow, profits, you name it, are actually being deployed into these opportunities. And so investors are really, really concerned. They want to make sure there is something ultimately to show for it. Now, again, the good news is there is a lot of investment going in, but there are still a lot of profits left to be given to shareholders too. And so this at least gives a sense of kind of the scale, which has been incredible. And then even on the right-hand side, looking at, where has industrial production taken place within high-tech industries? Again, really looking at sort of the recession in 2020 and then even plotting the launch of ChatGPT to the public, where AI became more relevant to people's lives, which is interesting considering AI is not necessarily new. As a quick sidebar, you go back to the 50s, there were already developments taking place working towards AI. 80s, 90s, 2010, where like Deep Blue with IBM defeated Gary Kasparov in chess, natural language processing. There have been ongoing developments, but that was really a catalyst that kind of, I think, woke up the greater public maybe to the technologies that we're developing. But you can see a lot of that investment has been going into, computer equipment, communication and, equipment, semiconductors, looking at NVIDIA in particular, whereas other industries, excluding high tech, have more so stagnated at this point, which doesn't mean that's always going to be the case, as we'll talk about later. Just like the internet did not only benefit the initial winners, eventually it filtered out towards other industries, and now it's part of everything that we do.
Well, and I think that's going to be even in spades more so true with artificial intelligence. I believe that. I might be wrong, but we all can talk about it. But one of the things that, and I've been talking with, Adam Holt, who's the CEO of Asset Map, and Spencer Siegel, CEO of Actify. These are both fintech companies, and one of the things that I'm hearing, which is sort of very intriguing, is the internet democratized information, access to information. It basically made information available to everybody. Didn't mean everybody knew what to do with it, but it just made it available. Whereas artificial intelligence democratizes intelligence itself.
Yep.
So you don't have to know what to do with the information. You just have to know what to ask it. But that requires human intelligence. So what
Yeah.
I'm hearing is the advantage continues to go to the human who is learning how to wisely use the intelligence. And that's
Yep.
where I think it's going to end up. And the relationship with the client advisor relationship, this creates an opportunity for that to get deeper and even better and more meaningful in my mind.
Yep. I think that's true. I think a couple interesting things you brought up. More information is available, but you also have to know how to use it. And so, asking the right questions is a skill in its own right. From a more optimistic perspective, human, I don't think is going to be taken away because you still need experts because not everything you hear necessarily is always true, or you don't always interpret the information correctly either with some things in the AI world. But ultimately, being able to combine the two expertises, one, what people are good at and what they aren't good at, hopefully is augmented by what AI can do and create breakthroughs that really aren't replacing us, while it will be disruptive to some, but ultimately making us all better and creating new opportunities, new industries that possibly we haven't even considered today.
Well, and now, the thing that really, we talk about artificial intelligence and how it's changing things exponentially. I mean, it is like it's so fast, it's curving backwards. That's how fast it is. It's amazing. And now they've got this thing that I'm just starting to learn a little bit about, alpha AI, where AI is producing AI. So what's happening is we can't even comprehend what that
Yeah.
means. So whereas artificial intelligence is expanding its capabilities exponentially, and artificial intelligence is now producing artificial intelligence. Trust, which is a thing that people have or don't with things, that's a linear thing. Spencer Siegel was telling me that, and that is so true. So that trust, how we trust, what we trust, remains linear. And one of the things that the Mather Group offers our clients is a real human being who is actually trained to understand how to deal with real human beings. And so, what we're going to think here and now is the opportunity for all of us is to stay close, stay on top of things, don't overreact, which is what often happens. And remember that even with things like the internet, when the bubble burst, that didn't mean the market was then going to go down forever. It just went down for a while, and then it is obviously is at record levels now. That I believe will continue to happen, even if there was a bit of a burst. I don't think we're going to have one sit anywhere close to what we saw with the internet when that burst. What do you think?
Yeah, again, it seems like it's a little bit different. And so maybe if we go to the next slide, this will kind of speak to what has happened more recently. Again, why people feel that there may be a bubble. And it really comes back to looking past over, 2021, 22, 23 onward up until today. You can see there's been a clear divergence between the performance of those magnificent seven hyperscalers, AI beneficiaries, and everybody else, especially within the US, taking more of a US centric view, at least right now. And so the returns from one perspective have been eye-popping. But at the same time, you can see earnings have been good, and the earnings that have grown in the Mag 7 versus everybody else have been better on balance. The big question, though, it's again compared to past environments, having positive earnings is clearly important. Higher rates of earnings deserve a higher premium for the stock price, so the price to earnings multiples. But at the same time, it is possible that even being highly profitable, having high rates of earnings can still lead to a pullback if the price gets to be higher than what, expectations can really match, especially over the shorter to intermediate term periods. I think the good news is while AI is making up a substantial portion, the tech companies are making up a substantial portion. A lot of the real, call it AI infrastructure companies, some of the things that may be even more frothy aren't necessarily found in the public markets. They're private companies, and so they aren't things that necessarily affect the everyday investor at times. And even if AI underwhelms or under delivers, especially over a shorter term period of time, the underlying businesses that are benefiting are still pretty good in their own right. They aren't, even before AI, they were exposed to major pullbacks. And so we just have to be maybe a little bit more rational, balanced, maybe not just chase the things that have worked recently. You still want to participate in it, but don't overdo it. Because ultimately, if it's as transformative as people believe, there's others in the industry that I've talked with, large asset managers like the BlackRocks, the Vanguards of the world, et cetera, giving some examples that have shared. It might be smaller cap companies or value companies or companies that weren't the expected winners today that ultimately outperform because there's more room for improvement and the valuation is more reasonable. And so
Well,
taking it
something
as
you said earlier too, Adam, is so important is that it's not just these stocks that are going to benefit. It's the world itself. Every organization, everybody is going to have impact from artificial intelligence. Artificial intelligence is not going away. The question is, how will humans learn to use it? And that's where our own wisdom has to come in. And as Socrates pointed out some centuries ago, our wisdom begins with our recognition of our ignorance. There's a lot we don't know. And Adam, you said something that I think everybody should really appreciate, and that is some of what we don't know can be discovered by artificial intelligence. And that we don't know can help us take us as humans to the next level. So
Yep.
humanity it's got a relentless uh, appetite for growth. You know, as individuals, I know this is true about Adam Recker. Adam Recker has an insatiable appetite for personal growth. Not everybody does, but humanity as a human nature, our nature is growth. So we're not going to stop. So what we need to do is gain the wisdom to use the AI. So it's AI wisdom. And what I hope our clients and those of you who are considering becoming clients realize is what we're going to be doing here at the Mather Group is applying human wisdom to make sure that the AI that we use to support what we do for our clients is actually correct. Because not all artificial intelligence is accurate. And so when you talk to the Adam Reckers of the world or the Adam Holtz of the world, you put artificial intelligence in the hands of people who are intelligent, they will do brilliant things with it. And that's what you can count on. So Adam Recker is one of those brilliant people who will use artificial intelligence wisely. I am one of those guys who introduces you to guys like Adam Recker. So that's how it works. And the Mather Group, what you get when you work with us is the Mather Group. You don't get just me or just Adam. You actually get a whole bunch of people who are actually paying attention to the output of this artificial intelligence to make sure that the way we use it contributes to the advice that we can give all of you. So I just thought I'd throw in a commercial message. I don't normally do that, but anything you want to add to that, Adam?
No, I think it's again, one of the things I think keeps coming back to mind is you can't blindly trust. You have to verify. And a lot of people are concerned around how do you separate what's hype here and real value. And that again is a skill in its own right, and something that we're helping clients with, something that we grapple with every day. Because we look at new providers for other ways that can help our business. There are also other things we look at that, clearly it's kind of a gold rush, but it may look valuable, but maybe it lacks substance. And so there are some clear use cases that augment, our actual business, something even as simple as taking notes so that you don't have to forget valuable pieces of a conversation that you can reference. That's very low hanging fruit. But also looking, are there things that we can't do today due to limitations as humans that AI can figure out for us, or at least point us down the right path? So constantly looking for those breakthrough technologies, and also reconciling, are there enough of those breakthrough technologies in today's environment to truly rationalize valuations where they are today? And so there's sort of a balancing act, because can't completely ignore it. There's a lot of concerns around like circular revenue. Like it feels like there's just money shifting hands in a small group of people. There may be some excess there, or maybe not depreciating semiconductors appropriately, where the assumptions are just a little bit too rosy. That can be a risk, a near-term risk to markets. Not saying tomorrow necessarily, but has to be accounted for, while still understanding that as we improve and we find better ways to incorporate this into the business, we expect good things to happen for productivity across the board. Um,
Well, And these are, the questions we've kind of really been answering throughout the conversation that we've been having today. But this first one, is AI already factored into valuations? Largely, you've been saying, of course, it has been.
Yeah.
And so whether it's accurately factored in, we don't know for sure until we start to see the actual results.
And
And
it's the wisdom is you would expect all immediate information known in the market to be factored into today's prices. It's the things you don't know that ultimately are going to affect future prices. Um, but again, from maybe more of an optimistic view in a sense, thinking about how it could be a bubble or maybe a rational bubble, as some have called it, in the near term, it still can have a long way to run too over the long run. So if we go to the next slide, this kind of points this next concept out for a quick sidebar. But you can see throughout history, and this is something put together by J.P. Morgan, there were developments like the electric motor invented in 1890. Initially, there's kind of a productivity boost. Now, was that due to the electric motor or other things? It's hard to say, but as you fast forward through time, as there's more adoption, you see productivity increase. Then you have other, it leads to things like automobiles, helps with aviation. Then you have something like personal computers invented and internet start to take off. Not immediately transforming the economy. It takes a while to finally, really get our bearings and figure out how do we harness this new technology. But as we figure it out, you have technological developments, productivity gains, etc. Really, we haven't had many breakthroughs like that in a while. And so now kind of the hope is this could be our next new internet. And based on the early sort of generative AI developments, call it around the 2020 period is where it started, even running up to today, you can see how there can still be plenty of room for development in the coming decades for a technology, even with it being maybe a little bit frothy or having extended valuations for at least a subset of the market. Which again, our argument to that is you don't ignore, you don't completely avoid it. You invest risk appropriately and you diversify, recognizing that today's winners, if history repeats, are also likely not necessarily going to be tomorrow's winners. And so you want to be diversified and not try to just chase the recent winners. To the right-hand side, this is more talking about adoption too. And so in aggregate, it seems there's been an uptick in adoption. Now, more tech-centric companies clearly have been bigger adopters up until this point and are still planning to do more. But you can see there's a lot of room for growth in other industries too. Now, some maybe less so, things that maybe are a little bit more manual, require humans to work with their hands, not immediately replaced. Trades, things like that, maybe not as impacted. But there is a lot of room for growth, and there is planned adoption by I think nearly all industries considering ways to get involved.
well, and even those that aren't considering it are going to be involved, like it or not. And that's that's the deal. That's kind of like the people that don't want the waves to come in on the shore. They're going to come in anyway. Even if you don't want them to, you cannot stop that. And so artificial intelligence is really here. And this is really an important slide I like because you can even see our own industry is clearly on the right side. You look at finance, insurance, education, we're all part of all of those things right at the top there. That's all part of what we do here at the Mather Group. But under the bucket of know your client, what we're going to be clearly ahead of the game in is making sure that we know each and every client really well. What do they care about? What their values are? Know their situation, and if we can know the client and their situation and their options, we get to weigh in as human to human and actually help them make some of these critical decisions. So keep in mind that that's the value that the human will bring to the equation. Artificial intelligence is going to help you a lot. And as Adam Holt shared with me, I loved the comment. He said, the quality of your life in the future is going to be determined by the quality of your questions. So if we can ask the right questions on the kind of things we want, we're going to get some really good answers. And then we can partner up with our human advisor to help us do the things that we need to do to actually experience what we're looking for. So I know we're hitting towards the end of our time together, but I also wanted to hit on how the largest companies, there's a slide here that I thought there's a few things you might want to hit that people want to hear.
Yeah, again, kind of speaking to, because people want to know what's next, how to set expectations. And so kind of again using what we've talked about today as a guide, you can see that over time the leading companies have changed. You know, the past winners did not end up being the future winners. And so they kind of color coded it by, different time segments. And so the green were, the largest companies in 1985. You fast forward through time, some of those were still winners in 1995. Some were still winners even in 2005, and even a few in 2015. But you can kind of see that over time, they tend to kind of fall, maybe more towards the middle of the pack, if not further. Even if you kind of imagine, unfortunately, there's not a 2000 time frame in there, but again, thinking about what was taking place during the tech bubble and all the developments, or the internet bubble, we should say. You look at '05, there's, some companies you could see having exposure to the internet or being early beneficiaries of that, IBM in particular. But you fast forward even until today, 2010, 2015, see the names there. They aren't things that I think would scream, oh, these are clearly tech or internet companies that ultimately ended up winning. Just like today, when we see, a lot of heavy hyperscaler, Mag 7 exposure, NVIDIA, Amazon, Alphabet, et cetera, it reasons to hold that maybe you fast forward 10, 15 years, you probably wouldn't expect to see all those companies there either. And so, again, a firm argument for diversifying and thinking who ultimately could be the beneficiaries of these new technologies. It's not necessarily who first comes to mind. Because, again, while companies can be very transformative, at the right or the wrong price, a great company is not necessarily a great stock. And so we want to maintain that broad-based diversification to feel more assured that we're ultimately going to own those eventual winners. And by trying to concentrate bets and focus on just the winners today, increases the chance that you're going to miss tomorrow's winners. So,
Well,
yeah,
well,
big
and by
argument
the
for
way,
balanced investing. Yep.
I'm going to guess that the people watching this feel like I do when I get a chance to listen to you, Adam. I feel more confident, and I feel better knowing that there are some really smart people taking this information and processing it in a way that works to my advantage. So let's hit with the key takeaways and then invite everybody to join us again next month. So I'll let you wrap it up with some of this stuff. What do you think?
Yeah, I think trying to leave everything on a positive note, it's like we can't completely ignore the downsides, and we got to prepare for the worst, especially in the context of each client's individual plan, not take on undue risk, et cetera. But AI does seem to be a powerful development, and it would be, I think, unwise to completely ignore it and just hope that it goes away, because it's probably not going to. But at the same time, that you can have a healthy perspective around the debate, acknowledging both the good and the bad of what is going on, recognizing where there may be excess, but also open to the fact that there could be great opportunity in the future. And it's really focusing on, again, trying to have clarity, not focusing on just the headlines, which I would argue the media is not always very responsible. Just throwing a headline out there, stocks react to it without doing a whole lot of critical thinking in some cases around, can they actually live up to what they are promising or purporting to do. And so, we want to be part of that sort of that trusted team advisors have to answer those questions and try to, separate, noise from, what's actually real and applicable to each client's financial plan.
Which is a great segue because that little blue on the far side, that question at the top, That's a really important question. Is your portfolio and mindset aligned with what really matters to you? That's what we care about. We care about you. We care about what really matters to you, and we're going to make sure that our advice aligns to what really matters to you. Thank you for joining us. Adam and I look forward to doing this together each month, and I hope you look forward to seeing us. We look forward to doing it for you. Thank you.
Yep. Thank you.